The broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody. Um, I wanted to welcome you to another installment of CW's Researching the Cement Equipment Market. But before that, I wanted to wish everybody a very happy new year on behalf of everybody at CW, and hope that 2020 is prosperous for everybody. So let us begin this webinar. And today I would like to share with you the agenda, where we will sort of give a brief description of who's going to be doing the presenting, a brief outline about CW Group to those who are not aware of us, and then the main highlights for the report. Within the report, we will be focusing on capacity expansions. We will give you an understanding of new capacity breakdown, as well as the overall cement equipment market size, and then some estimations on sort of the equipment cost for commissioned capacity. And then we will sum up with a couple of scenarios for you in terms of where we see the market possibly going in the future. So to begin, today, myself, Prashant Singh, I'm an associate director with CW Group. I'm based out of our Mumbai office, and my two colleagues, Ms. Carolina Pereira and Ms. Juliana Vera, they're based out of our Porto, Portugal office, and they will also be contributing to this webinar. You have our contact and email details available, so please feel free after this webinar to get in touch with us regarding this webinar or any other questions or products that you would like us to find more information on. So to those who are already aware of the CW Group, please bear with me. For those who are not, let me just give you a quick snapshot about who we are. So CW Group is present across 3 distinct verticals. We're in the advisory, research, and media spaces. Under the advisory umbrella, CW works with major global consultancies and leading institutions, international organizations, including the World Bank, IFCs, and several sovereign wealth funds on different kinds of projects. We provide consulting and advisory expertise on a very diverse portfolio. Under the research umbrella, we focus predominantly on cement, and we publish a number of reports, including the trade prices report, the global volume forecast report, to name a few, which are industry benchmarks. We also do detailed industry and country reports. One of the main features of any syndicated research coming from CW is both a historical review as well as a 5-year forecast. We also provide various commodity price assessments for products including cement and clinker. And under the media umbrella, we provide online access to our vast database of information. We have newsletters for topics of interest. Additionally, I would be remiss to mention that we also host different meetings, one of which is slated to be held in Miami on the 16th and 17th of January, the CW Summit of the Americas, which is an exclusive gathering where notable attendees include the chairman of the World Cement Association, where we will share, CW will share detailed insights on our perspective of the global cement market and also on developments particularly focused on the Americas. So if you are interested, please do get in touch with any of us or the CW media team on the details that were provided. So let's now go and to the meat of the product, which is the World Cement Equipment Market report that we're here to discuss. So what does this report provide? This report provides a comprehensive overview of the global cement equipment forecast, which is based on a detailed review of capacity expansions, where we look at, of course, greenfield, brownfield, and prospects for upgrades and spares. The report does a breakdown of the cement equipment market via a matrix of regions, as well as by plant equipment by unit and dollar value. We arrived at this data through a combination, of course, research as well as detailed discussions with numerous industry participants to get firsthand perspective and validation of our views. The product, as mentioned, will always offer a historical review as well as a 5-year outlook till 2024. We will also include in this report a review of the factors affecting major equipment, so drivers as well as challenges that we foresee coming over the next few years and for this industry. And all of this is on a data-focused analysis, so that you have hard numbers for every single segment discussed in the report. So at this stage, I would now like to hand over this presentation to my colleague, Ms. Juliana Vieira, who is going to take us through some of the highlights that you have all signed up to hear for. So Juliana, please take it away.
Thank you, Prashant. Hello, everyone. My name is Juliana. Now I would like to start our presentation for the World Cement Equipment Market and Forecast 2020. We are going to start with the capacity additions for the next 5 years. The capacity additions in our report weren't the only drivers that we have considered. So we have also considered upgrades, spares, and new regulatory forces that may be changed. Now, globally speaking, capacity additions is expected to decrease at a CAGR of around 4% during 2019 to 2024, reaching more than 9 million tons by 2024. So for the next 5 years, we expected that the cement equipment market will likely be driven by upgrades and spares as capacity additions become less attractive. In the next slide, we can see that more than 50% of the total capacity in 2019 is represented by brownfield expansions and integrated plants. In the regions of Asia, excluding China, Africa, and Middle East, which are the largest regions having capacity additions in 2019, the majority of capacity expansions is for integrated plants. Asia and Africa are increasing more than 6%, while Middle East and Eastern Europe are increasing more than 80%. Now, when we talk about greenfield and brownfield expansions, Asia, excluding China, and Eastern Europe are the regions with more brownfield expansions in 2019. Africa saw more greenfield expansions, while the Middle East saw a split between greenfield and brownfield capacity additions during the year. And in Asia, excluding China, more than half of the expansions were from brownfield expansions. However, in Africa, most 6% of the new capacity came from greenfields. Now, let's move to the next slide, where we will talk about the cement equipment market size. The market size of cement equipment, including upgrades and spare parts, is expected to fall at a CAGR of around 1% during 19 and 2024 period. The greenfield expansions are expected to decline more than 10% between the same period, and the largest declines in greenfield capex is likely to be in Eastern Europe and Africa. Talking about brownfield expansions is expected to decrease at a CAGR of around 4% between 19 to 2024. Eastern Europe is the region that will likely see the largest decline in the brownfield capex. However, upgrade and spares are likely increase across all the regions, having Eastern Europe and Asia, excluding China, the regions with the biggest increase for the market side. Now I will pass to my colleague Carolina to present the next slides. So thank you everybody for your attention.
Hello everyone, thank you for joining us. Let's now continue our presentations, moving on with market size by production stage. And when looking at this slide, we can certainly highlight the increase in terms of functional production stage, being this the most significant increase until our forecasted period. Environmental regulations and automation will be the driving force behind this share increase. When we focus on environmental concerns, new equipments will require more precise filtering, and also, of course, environmental regulations will be much more severe when it comes to lower carbon emissions. On the automation side, the need to centralize information and increase efficiency are seen as the central focus on functional equipments, mostly due to, of course, labor costs increasing in emerging markets, and therefore driving the need for more automatic procedures. Now, when we look at pricing for Chinese and Western suppliers, we certainly see that the trend would be to converge, and the gap between the prices of one and the other will be closing. As capacity expansions slow down, there is increased pressure on all OEMs that offer ever more competitive products and turnkey solutions. For Western OEMs, the maturing of Chinese OEMs presents a rising challenge due to their cost-competitive production base. These OEMs focus on emphasizing overall quality, reduced maintenance cost, and ease of operation. However, with increased competition, they have been forced to become more price competitive when it comes to Chinese suppliers. For the Chinese OEMs, they have been focusing on improving the perception in terms of quality that clients have regarding their product, and they're still combining it with extremely attractive financial packages. So overall, those would be the general dynamics between those two main equipment suppliers for the cement industry. Now, when it comes to market shares in terms of equipment supplier itself, we see that Western OEMs generally have a strong foothold in markets such as Western Europe, North America, and Latin America. On the other hand, Chinese OEMs generally are present in Africa, Eastern Europe, and seas, and also the Middle East, but not exclusively, of course. And that brings us to Asia ex-China, being this the region where both Western European manufacturers and Chinese manufacturers, based on the prevailing political sentiment, have opportunity to exploit. In terms of market shares, Sinoma is certainly gaining strength to our forecasted period, mostly due to, as I just told, projects in Africa and Asia Pacific. Now, looking at average equipment capex by region, so in terms of providing a regional overview of capex, of a capex study, for the purpose of this report, we consider equipment capex only accounting for the cost of the equipment itself, no civil engineering or other services involved that we know, of course, that are necessary and fundamental to the cement plant setup. Now, looking at this, at our bar chart, to the surprise of no one, China leads the world as the most cost-efficient equipment provider, capex per cost per ton. This is the analysis, of course, followed closely by Africa as a byproduct of large Chinese presence in this regional market. On the flip side, North America and Western Europe, guided by extremely stringent environmental standards, as well as higher labor costs, among other causes, of course, presents the most expensive region in terms of capex. The global weighted average for a plant capex in 2019, the year where this study was conducted, resulted in a higher spending on average for brownfield projects rather than greenfield projects, a trend that we have been seeing, and we will expect to continue for the next 5 years. The majority of greenfield projects happen in emerging economies, such as Africa and Asia ex-China, where the total capex for setting up a cement plant is lower than in regions where brownfields are popular, such as Western and Eastern Europe, North America, and Latin America. Now, we would like to leave you this webinar, and as a good takeaway, we would like to present two scenarios that reflect, of course, mostly the inherent volatility presented for our forecasted period, mostly for 2022 onwards, because of course capacity additions are yet to be announced, and for that period, the outcome will depend largely on the number of factors that we have taken into account, and we will see, on one hand, we will present one with a positive outlook and the other with a more challenging scenario. In a more positive scenario, where environmental regulations tighten, the construction is drives equipment demand, and the economic environment is stable for the foreseeable future, we can expect higher quality and higher quantity needs, a rise in order intakes, and of course equipment prices converging. This will altogether lead to efficiency-driven market. This would be a result of this positive outlook for the cement equipment market. When we look at the more gloomy scenario, we see where we have a price-conscious market, oversupply that leads to less expansions and the declining of demand growth. We see new investment in the industry declining, drop in terms of order intakes, and of course equipment prices continues to drop, leading to an oversupply that could result ultimately in mergers and acquisitions. Thank you once again for your attention in one of our webinars, the first of the year. If you have any questions, don't hesitate to contact us. this presentation, as usual, will be available in our website. You have our contact information. Have a happy new year and a great day. Goodbye.